Good afternoon and welcome to GrainTV. It's January 30th, 2013. I'm Logan Burgess. To my right here is Brock Shimano. Well, Brock, let's jump into fire tip. See how the grains traded on a Wednesday. We actually picked up some pretty good steam here across the grain complex. As we can see, corn up 11 1/4 for March delivery, soybeans up 26 1/2, and Chicago wheat up 9 1/2 in today's action. If you guys want to take a look at fire tip for yourself, you can visit us over at grainhedge.com and take a no obligation demo there of the platform you're looking at. But Brock, it really seemed like soybeans got things started this morning. Can you kind of break down the action we saw?
Yeah, I think soybeans really did spark the markets higher today. What we saw originally was a 175,000 metric ton sale of soybeans going to China for 13-14 delivery. I think aiding that was a revised forecast for South America. It looks like it's going to be a little bit drier, a little bit hotter than what was originally anticipated for next week and a little bit further out for the next couple weeks or so. And then I think we really broke some technical resistance, and that really got the funds in there and buying quite heavily, and I think that pushes up higher. Corn and wheat, I kind of think, just fell into the role of following soybeans higher on quite a sharp up move today.
Yeah, you know, taking a look at corn a little bit closer, this morning on the morning grain call, we were talking about 734 on the March contract being an important price level to watch. And today we were able to trade through that with pretty good conviction. Last trade here was 740 3/4. So I think the corn bulls out there are certainly going to get a little bit excited about this. We've seen a pretty clear downtrend in corn here since the highs during the summer. And with the recent action, it's looking like that's going to become a broken trend here. We're going to have to keep an eye on it, though, in the next couple of days. But certainly giving the corn bulls out there a little bit of a boost just technically today. And that was in light of some pretty weak ethanol numbers that we saw this morning.
We did get some pretty weak ethanol numbers once again. We had a reduction in production by 22,000 barrels per day, the lowest level since they've been reporting weekly production levels that started in June of 2010.
Right. We
also saw stocks increase by about 500,000 barrels as well. If you take a look at this chart that we've been following all marketing year long, the green line is what GrainHedge, what we're expecting to see to meet our forecast of 4.4 billion bushels of corn going to ethanol use. The red bars are what we're seeing in weekly production in barrels per day, and the blue line is what we saw last year at this time in barrels per day. So you can see we're quite a bit lower than where we were last year, and we also fell below our forecast of 4.4 billion bushels of corn going to ethanol use this week as well.
Yeah, Brock, so it looks like, you know, seasonally we tend to see kind of a fall off in ethanol production at this time of year. Do you have an outlook for ethanol production, especially considering over the last week or so we've had some pretty big plants announce that they are idling due to market conditions?
You know, I don't think the outlook is very good for ethanol at this point. We have seen quite a few plants go idle. Nebraska saw a couple of close last week. We saw some in the southern part of the United States close this week. But one thing to keep in mind is that the crush margins have gotten a little bit better. We moved about 33 cents to the positive side on crush margins this week for ethanol. So that does put a little bit of a bullish sentiment into the ethanol industry, but for right now we're still sitting at pretty abysmal levels.
Okay, well, we're going to have to wait till next Wednesday. Every Wednesday we get those EIA ethanol production numbers, so we'll be reporting on that next Wednesday as well. Brock, if we kind of change gears here, we just took a look at ethanol, but let's take a look at the feed side of the balance sheet here for a minute. If we think back to the USDA January WASDE report, we did see the USDA raise expected corn going to feed use by 300 million bushels, and today we wanted to take kind of a closer look at what kind of broiler placements we're seeing right now. If you take a look here, the red bars are placements on a weekly basis throughout the marketing year, and you can see here for the first quarter we're up about 0.4% on placements. In Q2 so far we're up about 0.6%. So it seems like demand from broilers should remain firm here moving forward. And additionally, we're seeing on a weekly basis, eggs right now are about 2% above where they were last year at this time. So as I said, broiler demand for corn should remain strong here. We're going to have to keep an eye on that, though, moving forward. I think the bottom line is that if we look at feed usage has not been rationed by these high corn prices in the same way. Certainly we've seen exports take a fall and ethanol production has slowed down. But feed usage seems like the one place that it remains relatively strong for corn, and that's certainly reflected in the January WASDE report.
You know, speaking of exports, we do get the export sales report tomorrow morning. The early estimates are for wheat to be about 350 to 550,000 metric tons of exports, corn 150 to 300,000 metric tons, and soybeans 650 to 850,000 metric tons. And of course, we'll be tweeting those at GrainTV is where you can find us on Twitter once those numbers are released tomorrow morning.
That's right, guys. Well, thanks a lot for joining us here on GrainTV on a Wednesday afternoon. Everyone have a great evening out there. We'll see you tomorrow morning for the export sales report.